welcome all the audience to the panel on impact investing. My name is Agata Fortuna, and I'm working at Koç University Social Impact Forum. And we are working with social impact actors, among them social entrepreneurs, civil society organizations, and we were also recently trying to target the impact investors. And I have fourth grade panelists here together with me. Abigail Noble, the CEO of the Impact, a non-profit working on encouraging the families to impact investing. Phyllis Bickman, founding director of Esas Social. Jem Baitok, managing partner in IDEA Capital, and Başak Suer, social entrepreneur. So I think like the impact investing is still a quite confusing term, and there is no commonly accepted definition of what's actually impact investment is. There are some characteristics, and among them, very important, the intention of creating the social or environmental impact and solving the vital social and environmental problems. One of the characteristics that is still widely discussed is actually expectation on the return. Having such a great panelist, I would like them right now to present themselves and their work and comment on their experiences and lessons learned in the field of impact investing. And I would like to start with Abigail.
Well, first off, it's a pleasure to be here with you all today. Impact investing is a topic that I'm particularly passionate about. I think it's, can you hear me now? Yeah. I think it's critical to the future of the world when we think about environmental resilience and social inclusion. I think that we are, capitalism and working with market economies is the infrastructure that we have today, but we need to incorporate in more of our heart into the activities of our brain. When we make financial decisions, we need to think about social and environmental impact. So impact investing is an intentional strategy to get financial return alongside social and environmental impact. There's a wide range of returns. The impact investing market is as heterogeneous as the traditional investing market. You've got fixed income products that might have low single digits. You've got green bonds and social impact bonds, which are a form of contracting for social services. You have impact private equity, which can get in the mid to high double digits of growth, of returns. And time horizons vary as well in the impact investing space. So impact investing is not an asset class itself, it's a strategy across asset classes. The area of impact investing that tends to be the most sexy or gets the most attention is investing in early stage enterprises, impact venture capital, thinking about social entrepreneurs, which is why it's particularly fitting that we have this conversation at the Global Entrepreneurship Congress. The organization that I represent, The Impact, is a network of influential families around the world. It's 40 families, including the Rockefeller family, the Ford family, the Pritzker family. And what they say is how we invest has moral consequences. And we can all do a better job of considering the impact of our actions and our investments on others, and that we can leave a better world to future generations.
Phyllis, now I would like to ask for your experience.
So the experience of the organization that I helped found 3 years ago is one thing, and then the experience that led me to that experience is another. But I start first with Esas Social. I think maybe many of you in the room know Ali Sabancı. He's the head of the organizing committee for Turkey for this Congress. He's the part of the family that I work for. Esas Holding is the name of their family company. And with his mother, father, sister, himself, his nephews, they're all engaging in different business activities. And in 2015, it was their 15th anniversary of Esas Holding, and I met Ali Bey, and he said, we are ready to do something as a family for society. They have this motto of Esas Holding as creating sustainable value. And they wanted to take that philosophy and bring it to social impact spaces. So we worked for almost a year to figure out what Esas Social would look like. And at the end, it was decided it would become the social investment arm of the family office of the Sabancı family. And the second thing we had to decide was what the first issue area would be. And it was decided that for the family there, what really bothered them about what was happening in Turkey is this really high unemployment rate of university graduates, somewhere between 32%, 36%. It moves around depending on the month of new university graduates between the ages of, let's say 22 and 24 are unemployed for at least a year. And so began the journey. And this was a family that has a strong tradition in philanthropy. I actually worked for the Sabancı Foundation, which is part of the Sabancı Holding, for several years before then. And so the family itself is very philanthropic. But Ali Bey and his family are, as you know, very active entrepreneurs and investors. And they do private equity, and they just set up a VC fund in the holding company. So they wanted to marry very much their perspective of philanthropy and social investment. And so we're on the road toward impact investing, I should say. That's a vision. But where we are today is actually experimenting in the field on a youth employment program, which I'll talk about later, what it means to actually design something that has social impact that could potentially also have a financial return and ensure the sustainability and the growth of the work that they're doing. Because it's interesting, I don't know, in many of your countries, I would love for the Q&A later to learn how many NGOs or foundations doing really high impact work in the area of youth unemployment. It's a market issue and needs a market solution. So for philanthropy to address it with only charity and donations and these kinds of more, let's say, short-term solutions is very difficult. So for instance, how do we think about human resources headhunting for young people, for disadvantaged people? And we'll see that in funds like Acumen and many other well-known impact investing funds, a good portion of their portfolios are on job creation and youth unemployment because it's a unique space. So that's where we are, and I'll stop there. I'll end by saying how I got here. It's quite funny to remember that now almost 20 years ago, yes, I'm getting old, I was part of a team that started Turkey's first facilities-based incubator. And we had 3 companies, and we were one of the first to develop streaming media online. Think now how old, a long time ago that was. And it was an investment of Super Online and Turkcell, Turkey's biggest mobile phone and internet providers. They had invested $1 million, and this is in year 2000. So, the way that things change and evolve, and now coming back into this space is also quite an interesting journey for me, and I think there's a lot of lessons we can be learning from each other, whether we're in the financial impact space or the social impact space.
Thank you. I think it's very interesting that the links between actually how impact investing is actually developing, like from the one side like philanthropy and the other side like emerging from the startup world. It's like joining two very important idea for the current sustainable development, and it's lead to me again going back to intention, because I think it's actually the crucial part of the impact investing. And right now I would like to ask Başak from Social Enterprise Giving about her intentions.
Thank you. I'm Başak. I'm the co-founder of a fundraising social enterprise in Turkey. It's a mobile app. If you speak Turkish, I strongly advise you to download it. And we build a fundraising platform for NGOs, thinking that one of the major problems that NGOs have is to raise funds for the causes that they work on. And as we see it, there was an opportunity, there was a potential to find a new creative ways in line with the current technology and also user behavior. So we created a mobile application where any individual or any companies can sell any products or services and transfer the funds as the donations to the specific NGOs that they choose. My background is from the corporate life actually, and when I was working in, let's say, in a multinational FMCG company, I was thinking that one of the major problems that we have maybe in the world, in my opinion, is that most of the, let's say, top-notch new graduates are trying to find some career opportunities in companies that has usually very limited positive impact on the society. And I was thinking that this was a major problem because I think one of the most important resources that we have is the human resources. And if you take the top-notch human resources to, let's say, lower positive impact companies, it's kind of like a mismatch for the future of the world, let's say. So that's why I was also had the intention to pioneer on creating, let's say, sustainable and scalable social businesses in Turkey.
Thank you. I think, like you mentioned the new generation. Yes, you mentioned. I think this is also the factor that drives the impact investing as well, because the fact that the young generation is actually willing to do something meaningful and wants to combine their work with influencing their communities in a positive way actually contributes to the development of the impact investing market. And now I would like to turn to Cem Baytok, who is a managing partner in Ida Capital. It's an investment management company working on the topic of impact investment.
Yes, hi. I'm Cem Baytok, managing partner of Ida Capital, and we are managing the first and for the time being only impact investing fund in Turkey. And we are investing at early stage so-called startups, like a typical VC, but in the areas of agriculture, education, healthcare services, energy efficiency, financial and digital inclusion. And we not only seek financial returns, but also we are seeking to create either social or environmental impact for the community in the investments that we make. And how that two concepts can relate or co-survive with each other. I mean, creating an impact and creating a financial return. Actually, at Ida Capital, we are financial-driven management company, so that we are seeking for financial returns. And my past job experience is related with private equity investing in Turkey. And about 5 years ago, we decided to go into the early stage investment or venture capital segment in Turkey from private equity. We had our own entrepreneurial experiences as well, and there are several fundamental macro and micro reasons why it's time for Turkey, for entrepreneurship and for venture capital, and for the countries like Turkey in the emerging markets. But after making our hard work and strategic analysis on the exact data and defining our strategies, how the growth can be created in the investments made in the countries like Turkey, we defined several key areas that I defined like agriculture, healthcare, education. Then we realized that these are the areas where you can create impact as well. And only the impactful businesses can be able to grow. That's another factor. Impact is not an additional thing. It's in itself. And in all the business deal flow that we look at right now in Turkey, hundreds of companies, just a few are coming from the social entrepreneurship side, which is okay. Most of the examples do not or are not aware that that they are making or they are sitting on top of a potentially impactful business. And what we are helping them to design or to pivot their business model so that it can be scalable, it can be profitable, but it can be impactful as well. And with that, we believe that they can be competitive and they can be creating a survivable businesses in the future. This is the core reasoning behind our investment thesis, and that's why we are a return-oriented investor, both financial and also social and environmental. And these are the countries like Turkey, where these potentially two conflicting objectives can meet with each other. And for the next 20 or 30 years, I believe that this gap will be shortened, and the potential businesses in the emerging markets will create more and more growing success stories.
I think this the point you mentioned actually, like how the impact, like how managing and increasing social environmental impact can also contribute to the company's development, like how it creates the additional value to the financial value. I think this is very important point, and I do agree, and hopefully we will be seeing more of it.
Can I add something?
Sure.
Here? I keep nodding my head because I've been thinking a lot about this reverse engineering, what I'm calling it, or cross-fertilizing. I think there are a lot of high-impact startups that do have this social potential but don't necessarily prioritize it or look at it in this way or maybe even aware of it. And to have investors with those lenses on to look at it from this angle and to promote it. From my personal experience, and surely there'll be people in the room who may disagree, in Turkey, having been on the startup side first 20 years ago, and over the 20 years I moved into nonprofit work, grant making, working with NGOs, social issues, making sure money reaches organizations trying to make social impact. I have more hope that this strategy will give us at least 3 or 5 very investable, good examples rather than the reverse. Because starting from the social sector in this country in particular, especially now, is very challenging, and that's not the topic of the session, but I just wanted to raise it for maybe some of you coming from other countries where that's also similar, the dynamic in the social sector and trying to reach certain populations and develop certain solutions. There's a lot of dynamics that make that much more difficult than reaching it from a more finance-oriented perspective.
I think your comment is the perfect introduction, actually, to my second question, which is on developing what's the ideal social investment ecosystem. I mean, in many countries, it's better developed. Like I think in Turkey, it's still at the very early stage. But what do you think? Like, what's the ideal ecosystem that would enable impact investors, but also investees to create more social environmental impact? And Phyllis.
Oh, I get to talk again. Lovely. I have 2 things. One is I think the point about human resources and people investing in people is important. I've been to a lot of idea competitions where we're basically just listening to the idea. We don't know anything about the person who's presenting the idea. Do they have the profile to be an entrepreneur? Are they an entrepreneur? Do they have the resilience? I mean, there's a lot happening around, things around job fit and understanding character and background to see, positioning in that sense. So I think about looking at not just ideas, but also about people. And this doesn't mean to eliminate people. This is simply to see, maybe they have a great idea, but are they the person that has the right kind of character makeup and intention to bring it to market? Or maybe they'll need something else on their team. And so this was actually just from my own background of working in organizational psychology. The second thing I would say from the impact investing, I'm probably going to provoke some discussions, even tensions on the panel, but I believe in the case of Turkey and other countries like it, where we've really been several years now in the idea phase, trying to find good ideas. First of all, I hear a lot of people saying good ideas are not coming easy. No matter how much money is there. There are some people that say that more money attracts more ideas. So this chicken and egg situation. I personally would prefer, and this is actually the way that we are approaching it at Essence Sociale, we put out something good, we invest our time and our money to make it as good of a solution as it can be, bring it to market, and start to get some 2 or 3 really good examples out there so that we can show, especially the investor side and the business world, what these models look like. Because I think right now there's a lot of discussion around impact and investing, but what's an example of a social business? Not many people can tell you. So I think rather than ecosystems and ideas and more people, my approach would be, my vision would be more focus. Get 2 or 3, invest in them like crazy with the very right people and the very right infrastructure, and bring them to market and see what happens.
So developing in new cases, yes, like presenting the cases. I think this might be very good for the especially markets as Turkey, like with an early stage, like to encourage the stakeholders, like to get engaged.
May I add something on that?
Sure.
I think we are sitting on top of a treasure because ideas should be solving a problem. And the problems,
We have so many.
and there are abundant of problems in our geographies. Our entrepreneurs, not just youngsters, I mean, at every age, should be going out to streets, should be going out on Tolia, see the farmers, see the hospitals, see the schools, and pinpoint the problems there. And believe me, most of those problems are not unique to Turkey. We have an investor and a partner called Capria Ventures, based in Seattle, US, but they're a global investor, and they're investing globally in the emerging markets, covering India, Africa, and Latin America. And we are partnering with 15 fund managers like ours, and we're sharing our deals on a weekly basis. And what I'm seeing that every pitch that I see from Brazil, Colombia, or India, or South Africa is similar to Turkey. The problem that define is fitting to here, and it's vice versa. So maybe we should be looking at creating another chapter or point of view in our idea entrepreneurship generation process by adding the impact and emerging markets view.
So it's like focusing on the problem, like and seeing the problem, because I think this is like the first step, especially for impact-oriented businesses, yes, to realize the problem, and then to be able to identify the real needs of the people and the opportunity emerging.
I mean, in our mentorings, we say to the founders that there are only a few people, or were few people in the world, to determine the problem of yours or of the people before they realize it, like Steve Jobs. But we say to them, you're not a Steve Jobs. So that at least in our case, to convince them to look at the real problem. I don't want to, my focus is to focus on the businesses there. And another strategy, if you are trying to be creating Steve Jobs, there's an S behind that. Let's open that subject into discussion. Would that be a logical and wise strategy for the founders in a geography like Turkey, with limited resources, with limited access to technology, a lot of hurdles to create a business? What would be the wise mentoring to those guys? That's open to discussion.
Abigail?
Yeah. Going back to the question of ecosystems, I think incubators and accelerators can play a critically important role in helping individuals with great ideas start to scale them. But it's beyond just the idea. You need to start to create the product. You need to rapidly prototype it get feedback on it, understand your customers, and innovate to where your customers are so that you're providing value to them and you're creating value for your investors. So that mindset is critical for entrepreneurs who have an idea to take their business to market. Also, I think we can learn a lot from Endeavor, which is one of the sponsors of this conference. And the founder and CEO of Endeavor, Linda Rotenberg, talks a lot about the entrepreneur-to-entrepreneur network, and that's the new model of VC, that successful entrepreneurs are mentoring and investing in younger entrepreneurs. And I think Turkey is a great place where that could happen more. And my third and last thought on the ecosystem, and this speaks more to your background with universities, is that we don't teach enough about impact metrics. And my background is I'm a quantitative economist, and I studied international development with some really great economists who happen to be Turkish, like Danny Roderick. So, but we focus so much on financial metrics and accounting programs in business schools, and we don't think about the externalities and how to quantify those and how to think about impact. And then in social programs, and when you think about sociology, anthropology, organizational behavior, and psychology, we need to understand better how to collect the right data so that we solve the problem. So we need to bring more of the impact side to MBA programs, accounting programs, and we need to bring more of the quantitative side to the social sciences. So it starts with the students and how they're prepared to enter the world and apply business practices to social problems, and thinking about how, once they're out in the job market and they're entrepreneurs, they're getting the support and mentorship they need through accelerators and incubators. And then they're getting support from other entrepreneurs who've been down that path, and they're being invested in by those who've gone down that path and can help them through the next phases of growth. So
I couldn't agree more. Especially on the, I think the role of the universities and educating young people. I fully agree that the impact, I think, as it's still also confusing what's the impact is, and like a lot of people actually, and we mentioned it already, create the impact, but they are not aware of it and are not able to manage it because they are not aware of how to collect the data, how to manage the information. Sometimes actually it's not as it might be not as difficult as it seems, but it's lacking the basic skills on data collection is actually something that I also observe in my work. Pashak, what about the perspective of a social entrepreneur? Like, what you think the impact investment ecosystem needs, and how it should be, how it should look like in order to support the social entrepreneurs and impact-oriented businesses?
I think in Turkey it's not yet that common, and awareness is not that high on investing on social enterprises and expecting some return on that. I've been holding certain, let's say, investment meetings with certain angel networks and certain other institutions, I can say. And I started off by explaining the social enterprise and its mentality of having some social or environmental positive impact, building a business on it, and also at the same time getting the return of the investment similar to the other enterprises or other startups, let's say. So the awareness, I think, is a bit low. Yeah, I mean, and if the awareness in the investors is low, then the investments are also not that high. So I think it's very critical to demolish the idea that people who tries to do some good cannot or should not earn money or get their return on the investment. So I think this is a major, let's say, paradigm shift that we should have in the Turkey's social impact ecosystem. And also, I think I will agree, Filiz, on the point that there needs to be a few very good, successful examples to open the road to the other social enterprises. Because in Turkey, for example, I will, speak about Turkey, but I think it's relevant to the globe. And we had two very successful startup, let's say, exits, not at the startup age, but two successful exits. One was an e-trade marketplace called Gitti Gidiyor, which was sold to eBay. And the other one is, let's say, Yemek Sepeti, which was sold to Delivery Hero. And these guys, I think, really opened the road for the other startups, showing that if you persist, if you insist on it, if you really work on it, you can do it. You can also create a successful business on these. So, and these, I think these good examples are opening the road and creating an incredible social impact on the society, showing that yes, the other people can also do this. And also, if we can show a few good, successful social enterprises, right brains invested on it, right amount of money invested on them, and then if they can open the way to the other social enterprises, other social impact businesses, I think this will be the most impactful thing that can happen right now.
So having role models, yes.
Exactly.
I will pass to my last question, actually, and before I ask it, I will give you like a small data. According to Global Impact Investing Network, impact investments share in global financial markets is estimated to be at around only 0.2% of global wealth. If this share rises to 2%, it could mean over $2 trillion invested in impact-driven assets. And as I came from like NGO background, and as I see that there is so many problems in this world that needs to be solved, that we need money for, I see that it's a huge potential in impact investing, in contributing to development, sustainable development, and solving crucial social problems. So my last question is actually like about what would you like to say to the entrepreneurship ecosystem leaders? Like, how would you call them to action in order to increase the impact investment market? And Filiz?
So I come from a management consultant background. So that really gives me a bit of a different perspective. I've worked in this nonprofit sector for 16 years. And so certainly I've appreciated all that time spent on how difficult, you said we have many problems. There are these wicked problems. This is a terminology being used very much throughout our sector, at least. They're child marriage, right? This is not something that you kind of take and decompart and fix tomorrow. This is very complex. Even youth unemployment, the role of families, the role of values, the role of generations and people not leaving home until they're married in certain cultures, so not being independent economically. This is not just, hey, let's create a food hero, delivery hero app. Yeah, this is a very different space. So as a management consultant, I see and wish for a lot of structure and sort of acumen, just on organizational development, on person development, on process development, understanding technology. Yet on the social side, so I fight with myself too, I don't necessarily think that a brilliant social entrepreneur who's never spent one day in the life of a very disadvantaged neighborhood in a big city of migrants and people that don't have access to basic services can develop something for that person. I just don't see it being possible. So I fight with myself a bit. Does that mean I could never be a tech entrepreneur because I'm not a tech expert? No. But on the other hand, I wonder, and I see a lot of ideas in this ecosystem. For instance, a gender equality board game. They want to bring it to market and sell it. Great product, right? Wonderful. How are you going to get that into the communities and families that need it most? I mean, we could all argue that we all need more education on gender equality, but there are certain communities that we know we want to have a greater impact on, and so they don't have access to those distribution channels. So summary being, one, for the social people, more structure, more business acumen, being a bit more disciplined and really realizing that this world is a bit more about business and structure and not just the social implication. And for the business side to realize, there needs to be a lot of expertise and sensitivity to the social issues and difficulties that we face. One last thing, I'll be in Berlin next month addressing their Congress of Foundations, all of the foundations in Germany, which are, as you probably know, quite big and have a lot of money. And in the European markets, where is that money sitting? In very low interest rates, maybe nothing really, just sitting there. And so there's a lot of debate on, could these foundations do more with impact investing? Why are they sitting on these big endowments? Berlin, huge startup capital. Many organizations there that actually have social implications that no one's really looking at. Why couldn't foundations come in and start investing to help make those assets more publicly available and scale for populations that need them? So, this is, I guess, one third thing, is to take philanthropy and all of that money and spin it a little bit more toward the for-profit sector with a social angle.
Thank you, Jem.
I totally agree with you. We should be increasing the flow of capital into this space, as you have suggested. And maybe it would start at the philosophical level. I was asking to myself as well, why I'm doing this job? Why do I manage funds? Or why do I want to make money? Make money for the entire career of yourself ruthlessly, and at the last 10 years of life donate half of it for philanthropy. It doesn't work. UNDP defined within their sustainable development goals, there are many areas that the world needs further investments and further improvements, and we need capital to flow into these areas. And I agree with you, foundation money or pension fund money should be moving towards more impact investing, and as being one of the intermediaries of this ecosystem, as being a fund manager, our prime responsibility is to create products attractive that the fund managers of those institutions would be deciding to shift at the start some, in the future more of their capital into this channel. So as a fund manager, we have two responsibilities. At one side, finding good investment opportunities to scale them up and then create impact, and also to put more money into the business. So I'm totally agreeing with you. It's our joint effort and joint responsibility, and we're sharing the same cause in this effort. There should be more funding be flowing into the impact investing, and we are observing that as well. It's happening right now. Within a few years, you'll be seeing a lot of more new news and new investees, new funding, new vehicles that has been created. I've been observing this for the last 3 years, and each year it gains momentum. So maybe next year the attendance in the room is still good, but maybe next year or the other years there will be a lot of more people watching the impact investing case, because it's a fact right now.
Thank you. Abigail?
Yes. So I'm thinking about a lot of you in the room who are entrepreneurs and are so focused on growing your companies. And a lot of the time there's that singular focus on how do I get to the next milestone of market share, of the size, how many people are working for us, how many suppliers and distributors we're working with. And what I hear from a lot of the individuals and families that I work with who are in your shoes 5, 10, 15, 30 years ago is that they wish they had done more with impact throughout the stage of building their business. Now they've got several $1 billion of wealth, but they define wealth very differently now. They're thinking about it as, what positive legacy have I left on the community? What example have I set for my children? How have I made the world a better place? And that doing well and doing good can go hand in hand, even more so in this economy, when consumers are thinking about buying products that have a good brand, that have an impactful brand, that are environmentally responsible. So thinking about ways that by infusing impact into the way that you do business, you get a better financial return and lower risk. Pierre Omidyar, who founded eBay, said, I don't get the concept. When people talk about giving back, I don't get it. That means at some point they were taking.
Too much.
Yeah, taking too much and giving back. So don't wait to be impactful, to be philanthropic, until after you've had an exit, until after you've reached a certain level of wealth. It's too late then. You got to start at each step of the way and align yourself with your intentions and what impact you want to create in the world. And it doesn't mean that you're trading off financial return. It means that you're integrating what you're building and your vision with how you're building it.
Thank you, Başak.
Great. I wanted to applaud.
That was a very nice call to action.
I couldn't agree more. And one last point, actually, from my side, is that I think, I mean, this is what Abigail told is like an enlightenment that most of the people are getting a bit late, let's say. But I mean, it should happen for sure, and maybe we can help the, let's say, investors in our country as well to raise awareness on impact investing, and also how they can start building their legacy on the world. Because apparently, I mean, if we separate the impact investing from the general investment networks, we are kind of like separating or alienating it, like treating it like something very strange or specific. But no, actually, in all the angel networks or in all the, let's say, investment networks, impact investing should be there. At least maybe certain percentage of the investments should go to the social impact businesses. I think that should be like a must-have for the investment networks. And because I think, as Abigail said, we will leave nothing except the impact that we created on this earth. So that's the only thing I think we should focus on during our time here.
Thank you.
Thank you.
And actually, like commenting on also what you said, I'm kind of having this idea that even saying like impact investing, even saying social enterprise, it's somehow telling it apart from like the regular enterprises, regular investment, and I'm against division in general. So I would really look forward to the situation where we will start also evaluating the business, like not saying whether they earn money, only the money, or create only the impact, but if we just build a spectrum and have the organization that are creating both social, environmental impact and financial value, and support all of them. We still have time for questions, so I would like to welcome the questions from the audience.
I see 3.
Yeah.
Should we take a few and then?
Of course.
Okay.
Mhm. Yeah. Oh, we have even more. I don't. Okay, it's my role to choose.
Yeah.
Difficult. I think I saw the first one here and the second there. This was 3rd, 4th, and 5th. Okay, so.
Thank you, Mustafa Ceyhan Turna. I'm representing Customs and Trade Ministry. Today we learned a lot, very brilliant ideas. Thank you, all of you. My question is, now we are studying about social cooperatives law.
Mm-hmm.
So, what is your idea about where should be the government? What do you expect from government?
Mm-hmm.
Or maybe it is none of government business, NGOs or the others institutions should do that. My question is this.
I'd
this is Burcu Yaşar from TED University. My question is for Cem Baytok. So you've been investing in
What university?
What university?
TED University,
TED,
Türkiye Eğitim Derneği.
Oh.
So you've been investing in normal entrepreneurs before shifting to social entrepreneurs. My question is like how your risk analysis changed when you did the shift, or your due diligence, or any other kind of like analysis.
Okay, let's take couple of more.
Thank you again. My question goes to Abigail. Okay, can you hear me? There are some reports mentioning that the startups who are trying to prove the impact have some kind of time burden because they need to prove financial sustainability and impact at the same time. Are there some good examples who are guiding startups in terms of showing how to prove their impact and help them to manage their time?
Thank you. Well, my question is, what kind of metrics do you suggest that startups would show to the investors in order to get the attention from them?
For impact investing, where are you from?
Peru.
And
Okay, thank you very much. I am Mahir from Marmara University. I'm from Ethiopia, actually. Guys, it sounds to me that all of you claimed that there is a possibility to marry, expecting financial return and making impact on the environment or on the ecology. But it sounds to me that these are something paradoxical. Discharging social responsibility is purely social issue. Expecting financial return is purely business.
Okay.
So, is it not ethical dilemma rather? Claiming to marry these two things is, I guess, impossible. Especially, it's also a source of debate in the academia. So it is the third bottom line. Social responsibility is the third bottom line. Expecting financial return is the first bottom line. So these are the two issues which are irreconcilable, okay, according to the claims of most authors. So how do you just make a point, or how do you just recommend a way forward? If there is a possibility, how do you just recommend a way forward so that these two contradicting issues are reconciled? Thanks.
Okay, thank you. So, who would like to answer the first question on the cooperatives, on the new law, and the role of the government also in the...
I worked a lot on the NGO law reform in 2004 in Turkey. Associations law, foundation law, and tax issues were also important. So we made a lot of progress, I think, in that area. A lot of progress. I think the role of government in any of this is, I think innovation leads, right? Regulation follows. I mean, there needs to be some practice, some experiences. Now we have few people setting up nonprofit companies, even though we don't have a nonprofit company law in Turkey. They're just not making profit, basically. And they're finding ways, doing it legally, but there's no particular... So I'm the type of person that would say, unless there's a need for regulation, let the practice lead, and then let the practice come to the government and say we need it. And at this point, I'm not seeing a lot of that, to be honest. But maybe the panel, other panelists have a different idea.
Danica?
In Turkey alone or in worldwide? You don't see any examples?
Well, the question came from the ministry in Turkey. If the question is also worldwide, maybe I pass that to Abigail, because maybe she has more of a global perspective than I do.
I don't know as much about social cooperatives, but in many countries it is harder to set up nonprofits than for-profits. It's ironic.
Yes.
The Impact is trying to set up legal entities in Chile, Brazil, and Colombia, and we have to go through so much more steps than the process of setting up a nonprofit in the US. And in some cases, our lawyers there say, just set up the for-profit, but run it with your ethics and with your mission. So if that's what works to get the right things done in Turkey, then I agree with Elise, that's probably the right approach. The only reason why you would need an organization to be a nonprofit is if you want the donors to receive a tax deduction, and that's the only reason why they would fund it. Or there's something within the nonprofit that needs, you pay lower income taxes, or you don't have to pay Social Security or real estate taxes or whatever it might be. So if the nonprofit is okay paying the taxes that are necessary in the country, and the nonprofit can get the funding it needs without having to give tax deductions to its donors, then you don't need an organization to be a nonprofit. Just set it up with whatever entity works, create your mission statement, and your principles and ethics, and run.
Actually, like from our experience, I can say that sometimes, and it's related to what you said as well, regulating too early, it's actually harmful. There are some cases of law on social entrepreneurship in Balkans, as far as I remember, in Croatia, where actually the social entrepreneurship ecosystem is not satisfied with the law because it was established too early, and their needs are different. And the same thing about actually like the tax deduction, maybe role of the government partly, because of course like it should be supporting, but for many people I was hearing about like that the tax reduction might be really enhancing for social entrepreneurs, but then I had a really nice conversation with a social entrepreneur who said that I'm proud to pay taxes, because this is actually like also my contribution to the community. So, and if I'm able to pay it, it means that like I'm creating like also the impact in this way. So this was also my short comment. And the second question was actually directly to Djembe.
I can give a direct example on a case which I lived. A startup in the healthcare space just came to us last year from Turkey. They had developed a mammography device with the TÜBİTAK supports and etc. And they were claiming that their device and technology was so good that they will be able to sell it to the half price where GE and Siemens is selling in US. And they need an FDA process, so that they were requesting funding. So I asked, what's the price? I mean, instead of $400,000, it would be around $150,000 or $200,000 per hospital. And I started laughing because in India, one of our sister funds had invested into another health tech company called iBreast. They developed a handheld mammography device with a lower precision, but the unit of per screening cost is around $1, and it doesn't have to be in the hospitals. The model is not to buy the device, it's pay per use. It's about 50 times lower cost than having a mammography in a hospital, and the business potential, 400 million women in India, so that they are not able to go to hospitals either because of the cost or because of the accessibility problems. But these devices can be used by the nurses. So where the impact is, I guess both inventors will be creating similar technologies. One, solve the problem that GE and Siemens has this device and I should be creating a better device with a lower cost. The other, solve the problem as, hey, there are 400 million women needing screening, and their affordability to pay for such service is around $1 or $2. So that's the impact. And the business potential of the second, I mean the 400 million women, is much higher than that. And then just a few months ago, GE Healthcare made an agreement with that Indian company to start serving the same device and same business model to 15 emerging market countries. That's the impact case. And that will be developed through the incubation and acceleration or mentoring processes, so that the inventors or the entrepreneurs will be thinking of creating impactful and both scalable and profitable businesses from the start. I guess.
Thank you. And the third question was to Abigail, actually, about the time management, like how to be how to manage the business and how to manage the impact
Yeah.
together.
So first off, a lot of investors, in particular venture capitalists, are more comfortable with financial companies not making a profit for the first 5-7 years than they are with the social enterprise. Not
Look at the irony.
Yeah, the irony of it. And so there is a double standard in the impact investing in traditional space. There's something about venture capitalists where they say, we invested in Facebook for the first, I don't know what it was, 5-7 years, it wasn't profitable. And yet social enterprises, we expect to be, in a strong financial position after 2 or 3 years. So I don't agree with that, and I think we need to change that standard. And with financial companies, they're measuring quarterly earnings, or if it's a public company, daily stock price. So the mindset is a lot more short term. With impact outcomes and metrics, it often takes several years for the impact to mature. And we were discussing before the panel, what does a successful impact exit look like? And we still don't know that. For impact entrepreneurs, the best recommendation I can give is to say, know firmly what your theory of change is and know what proxies are for reaching that. So it's going to take you, 5 years or 10 years to demonstrate that the impact is realized, that there are results. But you can say, well, what we know is in order to get to that impact, we're going to have to hit this milestone and this milestone. So we expect at the 5-year mark, at the 3-year mark, at the 1-year mark, at the 6-month mark to get certain metrics. And to, on a monthly basis or every 3 months, to measure the proxies of, if it's school attendance rate, which is a proxy for, investing in the future education of community. You can get school attendance rate, on a weekly, monthly, annual basis. If it's, whatever the sector is, you can, or whatever the business model is, you can say, this is the data that we have, and this is why we believe it's a proxy for us getting, we're on the right track to reach our impact outcome. And that kind of communication is what the investors want to know, because they realize that it takes time to make things work, but they want to know that you're tracking data and that you understand the connection between the data that you have and where you're going, and that your strategy is along the right lines and you're making the tweaks and the pivots that you need to make to reach the ideal outcomes on a financial and impact standard. Does that help?
Yeah.
Okay.
And I'm afraid that we don't have time to answer the last 2 questions because I was shown that we ran out of time. So I would like to thank very much the panelists and the audience. Thank you.